what you have Trump basically shooting from the hip on tariffs. I mean, he's going to set the tone, I think, a lot more than the sort of, if you like, the elected politicians. So on that basis, we're going to see, I think, relations between China and America deteriorating. I think when it comes to Russia, there is not going to be an easy solution there, as Trump has told us. I think quite a lot of commentators sort of took the view that Russia would immediately change everything and bring in this, that, and the other thing, and we notice huge differences. I think the principal difference, and this is something which obviously, was practical, was instead of trying to integrate a whole new raft of BRICS members, they created an associate membership category, which allows potential members, if you like, people who have expressed an interest in becoming part of BRICS. The Russian embassy in Nairobi floated the idea that, a gold-backed trade settlement currency would be on the agenda in Johannesburg. And it didn't make the cut. Why? China didn't want to, if you like, upset the world, upset the entire fiat currency system by backing this. India certainly didn't want to do it. India is Keynesian to the core. So the idea of going back onto a gold standard, if you like, would limit the Indian government's ability to manage its own economy very substantially. And not only that, but I mean, they've spent all their time trashing population for being gold friendly, because as far as I'm concerned, these were imports which were completely unnecessary, and without it, India would have had export, net exports, whatever, I mean, basically they're anti-gold. They're now accumulating gold because they have to. And I think also the other thing which is actually important in terms of BRICS is that the BRICS membership, of course, they talk to each other a lot, at government level and also at central bank level. And I think they're generally agreed that the West's fiat currency system is on its last legs. And that's why these central banks are aggressively accumulating any gold that they can get their hands on. The FOMC statement yesterday, Powell, tried to sort of say, well, slow down on your ideas about cuts in interest rates in 2025. I mean, for goodness sake, I've been telling people that, bond yields are going to rise. Now, what the Fed does with that, is a separate question. But bond yields are going higher, and they're going to go a lot higher. And, we're beginning to see them break out on the upside again. I mean, certainly, if you look at sterling rates, you've got a double whammy there because you look at the charts of the long gilts, and they are soaring. The yield is soaring, which means that the price is collapsing. And sterling is also in a very, very sickly position. That is going down south. And I think it won't be terribly long before we see it back down to, well, there'll be a bit of consolidation at 120 to the dollar, then 110. Then I really think, unless this government changes hugely, I think actually does lie in the Asian hegemons and the Shanghai Cooperation Organization and BRICS and so on and so forth. There is a whole world there which is actually larger than ours, certainly on a purchasing power parity basis and also in terms of population, which is going to thrive. I mean, you've got an industrial revolution which is happening throughout everybody associated with that, which is why so many countries want to be involved with it. But of course, at the same time, they're frightened of what we might do to them, like call in their debts or regime change or whatever how we traditionally manage these countries. So you can see that we're at a sort of bifurcation, if you like. The world is split very definitely into two, but it's going to be quieter on the BRICS side, I think, in 2025 than in 2024. There's a lot of noise going on about, a new trade-backed currency, and Russia had something like 220 meetings for BRICS countries and also those intending to join BRICS all around Russia. I mean, this is very, very active. So I think that's going to dampen down a bit now. In terms of other geopolitical factors, I think that we are looking at trade, which is now going to trade tariffs are going to be the big problem, I think, in 2025, assuming that Trump means what he says, that trade is the most beautiful word. And assuming that Scott Bessent is nominated Treasury Secretary, doesn't actually sort of stamp on that. I mean, this is actually another point. I mean, in the past, when you look at Smoot-Hawley, for example, Smoot-Hawley was passed by Congress, Senate, and then signed into law by President Hoover in early 1930.
Alasdair Macleod has consistently articulated the indispensable role of gold and silver in preserving financial stability and navigating the shifting tides of the global economy. The discussion surrounding BRICS nations and their collective approach to reasserting control over monetary policy highlights the growing sentiment that the Western fiat currency system is nearing its inevitable collapse. This narrative is not without merit, as central banks worldwide, particularly those in BRICS nations, continue to aggressively accumulate gold in preparation for the looming financial reckoning. The BRICS alliance, Brazil, Russia, India, China, and South Africa, has been at the forefront of challenging the Western-dominated financial order. In recent years, their focus has shifted toward developing mechanisms that reduce dependency on the US dollar. However, as Macleod points out, achieving a unified gold-backed trade settlement currency is far more complex than it may initially seem. The Russian embassy in Nairobi floated the idea of such a currency being discussed at the Johannesburg summit. However, opposition from key BRICS members, particularly China and India, prevented the proposal from advancing. China, while supportive of the broader goals of BRICS, remains cautious about any immediate actions that could destabilize the global financial system. The Chinese government understands the delicate balance that must be maintained to avoid alienating international trading partners. Similarly, India's Keynesian economic philosophy clashes with the constraints a gold standard would impose. For decades, Indian policymakers have discouraged gold hoarding among their citizens, considering it an unproductive use of capital. Yet paradoxically, India has become one of the largest accumulators of gold, compelled by the systemic vulnerabilities of fiat currencies. Central banks worldwide, particularly in emerging economies, have significantly increased their gold purchases. According to the IMF, central bank gold holdings have surged to record levels, with total reserves exceeding 1.16 billion troy ounces. This relentless buying spree underscores a collective recognition that gold remains the ultimate hedge against currency debasement and systemic instability. China, for instance, has been quietly accumulating vast quantities of gold, often bypassing traditional reporting mechanisms. Reports suggest that China's true gold acquisitions far exceed the official figures disclosed to the EMF. By acquiring gold through intermediaries or directly from miners, China aims to strengthen its financial resilience without drawing undue attention. Similarly, Saudi Arabia, another significant player in the global energy market, has been caught underreporting its gold imports, further highlighting the secretive nature of these transactions. Macleod highlights an intriguing development: the emergence of a shadow supply chain for gold and silver. This bypasses traditional markets, allowing nations like China to directly source metals from miners. This disintermediation reduces reliance on Western-controlled exchanges and ensures a steady flow of precious metals into their reserves. For silver, a significant portion of the industrial-grade metal now comes from concentrate, essentially a sludge byproduct from mining operations. China is willing to pay a premium for this concentrate, refining it domestically to meet its industrial and monetary needs. The shift toward alternative supply chains is a direct response to the perceived betrayal by Western financial institutions. The Bank for International Settlements, BIS, for example, undermined BRICS' efforts to establish independent payment systems, prompting these nations to seek more opaque and independent avenues for gold acquisition. This strategic pivot ensures that they continue building reserves while reducing exposure to potential sanctions or financial coercion. At the heart of these developments lies the growing distrust in fiat currencies. The dollar's share of global foreign reserves has fallen to 57.4%, the lowest since 1994. This decline reflects a broader shift toward diversification, with nations increasingly favoring tangible assets like gold. Unlike fiat currencies, which can be printed at will, gold represents a finite and universally recognized store of value. The advantages of gold are not merely theoretical. Since 2008, gold has outperformed U.S. Treasury bonds by a staggering 180%, providing a compelling case for its role in a diversified investment portfolio. Moreover, gold carries no counterparty risk, a critical consideration in an era of escalating geopolitical tensions and economic uncertainty.
What you have is you have Trump basically shooting from the hip on tariffs. I mean, he's going to set the tone, I think, a lot more than the sort of, if you like, the elected politicians. So on that basis, we're going to see, I think, relations between China and America deteriorating. I think when it comes to Russia, there is not going to be an easy solution there, as Trump has told us. I think quite a lot of commentators sort of took the view that Russia would immediately change everything and bring in this, that, and the other thing, and we notice huge differences. I think the principal difference, and this is something which obviously, was practical, was instead of trying to integrate a whole new raft of BRICS members, they created an associate membership category, which allows potential members, if you like, people who have expressed an interest in becoming part of BRICS, to, if you like, go into a sort of waiting room while, the integration process for them develops. And this is something which isn't necessarily immediate. I mean, it could take several years. Also, that they were going to immediately do away with the dollar. No, that's going to be a long, long process. I mean, it's an evolutionary process, if you like. That the Russians could sort of suddenly change this, I think was actually stopped in 2023 when the Russian embassy in Nairobi floated the idea that, a gold-backed trade settlement currency would be on the agenda in Johannesburg. And it didn't make the cut. Why? China didn't want to upset the world, upset the entire fiat currency system by backing this. India certainly didn't want to do it. India is Keynesian to the core. So the idea of going back onto a gold standard, if you like, would limit the Indian government's ability to manage its own economy very substantially. And not only that, but I mean, they've spent all their time trashing population for being gold friendly, because as far as I'm concerned, these were imports which were completely unnecessary, and without it, India would have had net exports, whatever. I mean, basically they're anti-gold. They're now accumulating gold because they have to. And I think also the other thing which is actually important in terms of BRICS is that the BRICS membership, of course, they talk to each other a lot, at government level and also at central bank level. And I think they're generally agreed that the West's fiat currency system is on its last legs. And that's why these central banks are aggressively accumulating any gold that they can get their hands on.
The resurgence of gold and silver as strategic assets is gaining momentum, driven by a confluence of geopolitical, economic, and structural shifts in the global financial landscape. Central banks, particularly those within the BRICS bloc, are increasingly fortifying their reserves with these precious metals, signaling a significant departure from the dollar-centric monetary system. This trend is not merely a response to current economic challenges, but a forward-looking strategy aimed at ensuring financial sovereignty and stability in an unpredictable world. The implications of these actions are profound, not only for governments, but also for individual investors navigating this evolving landscape. One of the most transformative developments in recent years has been the introduction of mechanisms like BRICS Pay and BRICS Bridge, which are revolutionizing the way international trade is conducted. These systems are designed to facilitate cross-border transactions using local currencies or gold-backed digital tokens, thereby reducing reliance on the dollar. This strategic pivot is a clear indication of the growing discontent with the traditional financial order dominated by Western institutions. BRICS Bridge in particular stands out as a groundbreaking innovation, utilizing blockchain technology to tokenize gold for trade settlements. This approach not only enhances transparency and efficiency, but also underscores the commitment of these nations to establishing a more equitable global financial system. The role of gold in this new order cannot be overstated. Central banks are using the metal not only as a hedge against inflation, but also as a geopolitical tool. For nations like Russia and China, gold represents a means to insulate their economies from the economic weaponization of the dollar. Russia's strategic use of its gold reserves to stabilize the ruble during geopolitical crises is a case in point. Similarly, China's discrete accumulation of gold through non-traditional channels highlights its determination to bolster its financial position without attracting undue attention. By bypassing traditional financial systems, these countries are not just hedging against economic risks, but actively shaping a new financial paradigm. The strategic importance of silver is also becoming increasingly apparent. Often overshadowed by gold, silver plays a dual role as both a monetary and industrial metal. Its applications in renewable energy, electronics, and medical technologies make it indispensable in the modern economy. Despite its critical importance, silver remains significantly undervalued, as evidenced by the historically high gold-to-silver ratio. This discrepancy presents a unique opportunity for investors, as the rising demand for silver in industrial applications is likely to drive its price higher. The push towards renewable energy, particularly the widespread adoption of solar panels and electric vehicles, is expected to further amplify this demand, solidifying silver's position as a key asset in the green economy. The integration of rare earth metals into this narrative adds another layer of complexity and opportunity. Nations like Indonesia, which recently joined BRICS as a full member, are leveraging their vast reserves of rare earth elements to assert their strategic importance in the global economy. The proposal for an OPEC-style cartel for rare earth metals underscores the growing recognition of these resources as critical assets. With China already dominating the refinement of rare earth metals, the alignment of these resources with the BRICS financial system is set to enhance their collective economic influence significantly. The global shift away from the dollar as the dominant reserve currency is one of the most significant economic trends of our time. The dollar's share of global foreign reserves has fallen to its lowest level since 1994, a clear indication of waning confidence in its long-term stability. This decline is mirrored by the increasing accumulation of gold by central banks, which now collectively hold over 1.16 billion troy ounces. This trend is not just about diversifying reserves. It reflects a broader strategy to insulate economies from the vulnerabilities of fiat currencies. The Federal Reserve's reliance on quantitative easing and low interest rates has eroded the dollar's purchasing power, prompting nations to seek alternatives. Gold offers a compelling alternative to fiat currencies. Unlike paper money, gold is immune to inflation and has no counterparty risk. Its value has consistently risen over time, outperforming traditional investments like U.S. Treasury bonds. For nations and investors alike, gold represents a store of value and a hedge against economic uncertainty. This renewed interest in gold is not just a response to current challenges, but a recognition of its enduring value in a rapidly changing world. Investors navigating this complex landscape face both opportunities and challenges. The resurgence of gold and silver as strategic assets provides a unique opportunity to diversify portfolios and hedge against economic risks. However, understanding the nuances of these markets is crucial for making informed decisions. Staying informed about global trends, such as the de-dollarization efforts of the BRICS nations and the technological innovations in gold-backed digital tokens, can provide valuable insights for investors. Physical assets, such as gold and silver bars or coins, offer a level of security that paper-based investments cannot match. Unlike ETFs or other derivatives, physical assets eliminate counterparty risk and provide tangible value. For investors seeking to preserve wealth in an uncertain economic environment, owning physical gold and silver is a prudent strategy. Moreover, adopting a long-term perspective is essential for maximizing the benefits of these investments. Precious metals are not short-term speculative assets. They are about preserving and growing wealth over decades. The integration of blockchain technology with gold and silver is another development that holds significant promise. By tokenizing these assets, nations and institutions can enhance the efficiency and transparency of financial transactions. This innovation not only modernizes the way gold and silver are traded, but also aligns with the broader trend towards digitization in the global economy. For investors, understanding the implications of these technological advancements is crucial for staying ahead of the curve. The path forward is fraught with challenges, but also brimming with opportunities. The actions of the BRICS nations, particularly their emphasis on tangible assets and decentralized trade mechanisms, are setting the stage for a more equitable and resilient financial system. As the global economy transitions to this new paradigm, the role of gold and silver will only grow in significance. These metals are not relics of a bygone era. They are the foundation of a sustainable and prosperous future. For individual investors, the message is clear. The time to act is now. By understanding the broader trends shaping the global economy and positioning themselves strategically, they can not only safeguard their wealth but also capitalize on the opportunities presented by this historic shift. The resurgence of gold and silver as strategic assets is not just a financial phenomenon. It is a testament to their enduring value and relevance in a rapidly changing world.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.